Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the afternoon swing trading floor. The humble host, Jeremy Alexander Newsom, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. What's going on, folks, from around the world? Woo-wee! It is Monday. Here we go again. This is Mr. Michael Ward. My girl Francois is going on. Ram says, what energy? What's up, bud? How can you not be energetic with a day like today? I love it. Mila's excited. Frank is excited. Sharon's excited. Anthony's in the building. Mr. Alejandro. Benjamin Loach is here. The Nod says, hello, everyone. What's going on, sir? Ram says, man, you've been talking, chatting, trading. You got to add tweeting, texting, emailing, cleaning, eating, working out. Absolutely, man. Doug says, hello from the Philippines. What's up, bud? Brian says, busy Monday. Oh, man, always busy. Always busy. Always got cool, fun stuff going on, making sure this is working out. It is beautiful. Okay, well, here's what we got going on today. So that you all kind of have an idea of what's going on for this week. I want to make sure that we all get the absolute most out of the free week and, of course, of the afternoon swing trading room, which is what's going on at this exact moment in time. So I'm just going to kind of give you like a general outline, if you will, for what the week is going to look like and answer some questions and just kind of hop in and present some information that I was looking forward to presenting. So obviously, as you all know, this is going to be every day of the week, Monday through Friday from 5 to 6 p.m. Eastern. And I do record the afternoon session every single day, not just the days that you are all here, but every single day, all the time. Now, granted, it's free for the entire world this particular week, but I always record it. I always email out the recordings. You always get access to that. So rest assured that if you want this content, you have it. Pretty much what we do in the afternoon room is 98% of the time, we focus on swing trading. And we look for and plan for what's happening. I didn't spell happening right. Happening tomorrow or in the future. And if I set up an official trade, right, I'll talk about where my entry is, where my stop is, all that kind of good stuff, targets, time frames, all that expectation. And then, of course, if I see a really good gap or I see a move that looks like it could be fun for the next day, I'll mention, hey, guys, I might want to write this one down for tomorrow because it looks like X, Y, Z is happening, and I think all that's going to occur. In the afternoon room, we trade options, we trade stocks. That's pretty much it. We do a whole variety of different types of strategies, and we do our absolute best to ensure that each day is a learning experience, a fun experience, something exciting, and I look at your requests. So through the week, I'll be taking your requests, looking at the stocks that you care about. Because if it was just stocks that I cared about, it would be a very quick lesson every day. I don't really trade that many stocks. You can't be in everything. So the number one takeaway for today is going to be you can't be in everything. Can't be in everything. So don't stress about it. A lot of the things I will look at or I will review will be for individual traders who requested for them. So we'll be taking requests for tomorrow in just a little bit. I already have all the stocks I needed to today. But don't worry about being in everything. It's absolutely okay. You only need one good trade a month. You only need one good trade a month to really make it work. I mean, a solid, nice, big winner. We will present numerous types of trades that you can place. You only need one. Only focus on a few, find out which one you like, and kind of crush it, okay? So if we have any questions, feel free to throw them out there. I'll answer some general questions. Normally, we go about 1 hour long. Today will be a little bit longer than normal, and I already mentioned I do record each trade. For those who decide if you ever want to trade with me in the future, you will get access to the Swing Trade Journal. So you'll have access to all the trades that are official, that are set up. You're going to have the exact entry, the exact stops, the exact charts. You're going to have all that information already ready to go, and you'll have access to that worksheet as well. For those of you who decide to sign up and continue with your live stream, you'll get access to that. All that good stuff is there. Pretty much anything that you think you would want to do, you would want accomplished, that is what I have designed for all the traders out there in the world. So ladies and gentlemen, without further ado, let's dive in. But in doing so, today's topic is most importantly something called Mentorship Monday. Mentorship Monday. And I do this every single month. Usually it's the first Monday of the month. But since I designed to do the free week, this Monday is Mentorship Monday. The next Mentorship Monday, let me actually get out my calendar. It will not be the 4th. It's going to be the 9th of July. 9th of July will be the next Mentorship Monday. And then the one following that will be the 6th of August. 6th of August. And the one following that will either be most likely the 10th of September, since the market, I believe, is closed on the 3rd. So anyway, just kind of give you an idea. We do these every single month. And today, since we're discussing swing trading, in today's session, we're going to discuss time frames. And I'm going to do my absolute best to give you exactly what I look at when I'm analyzing a stock for the very first time. I'm also going to include an article that I wrote not too long ago called my 13 Steps for Swing Trading. So I'm going to be pulling up some stocks. I'm going to look at exactly for the very, very first time, hey, this is what I will review to give you an idea of my thought process and my steps. And we're going to go through all that. And again, I'll record everything for you. Make sure to take some notes. Before we do that, though, I have a lot of traders in the past who have been keeping track of some certain trades. So I'm going to go through those trades first. Many of you are not going to be in these particular trades, and it's okay. I'm going to go through a few trades. We're going to look at a few things, and then I'm going to dive into some new stuff, look at some new trades, and then we're going to look at what are we talking about tomorrow so that you all can analyze those stocks that I'm going to be looking at tomorrow, and you can kind of figure out if your analysis matches mine, if you're way off, what your questions are, what your thoughts are, those kind of things. All right. So what I'm going to do, and I do this every single afternoon, is I review the broader markets. What's happening today, what's likely happening tomorrow. And for those of you who follow my YouTube channel, I am streaming live on YouTube. So hello for everyone out there on YouTube. I post a stock review every Monday, Wednesday, Friday. This week, I'm just going to be posting the entire hour of all the recordings. So you'll get a much longer review. You'll notice this red line I wrote was worst case scenario. I thought that, and again, obviously things could get worse, but so far it's playing out magnificent. How did I know that was going to happen? I didn't know. Know is a strong word. I had a really good idea that it would occur though, mostly based on how much the stock had already moved, right? I mean, you had a beautiful June. June was just absolutely gorgeous. Strong, strong move. And so someone once told me that stocks move up and down from time to time. They don't just go straight up. Nothing does this, right? You have ebbs and flows. So right now we're getting a nice, what I feel like is a comfortable retracement. So from here, today's candle is a very pivotal candle on the SPY and the broader markets because we should not, in my opinion, take out the low of today. If we take out the low of today, we're going to get a lot more choppiness for the rest of summer. That's at least my thought. So when I say take out, if we close on the SPY below the low of today, so that would be end of day bearish, we close below there, which is 274.91. And again, the template will update in just a second. But if we close below there, I think we're going to get a lot more choppy for the rest of June and July and really just the months of summer. Usually summer months are a little bit more choppy anyway. I don't know why that line's not updating. Let me see if I can add a new one. Close below here. Let's see if this works. Weird. Huh. Okay. Well, that's the price. It'll update a little bit. Close below this particular candle will be a pretty big deal. And if that happens tomorrow or anytime this week, if we close below the low of today, we're going to see SPY and the rest of the market really chop around a lot more for June. Something like that. It's going to be ugly. It's going to be a little bit rough. It's going to be phenomenal for day trading. And if you're swing trading, anytime you are in a sideways market, go ahead and write this one down. This is a very important takeaway. Anytime you are in a sideways market, sideways moves are designed to tear traders apart. You've got to be really quick, nimble, fast, whatever you want to call it, and buy as low as possible, because sideways markets are designed to trap everyone, to scare everyone, to get the average fast investor who tries doing too many trades too quickly. It's designed to scare, confuse, worry, panic, and then the market takes off once everyone stops panicking, worrying, getting whipsawed to death, and then the market just rushes higher, and it leaves most traders, feeling upset and sad. That's what likely could happen with a close below the low of today, especially if it happens this week. If that does not occur, then it is my intention that we're going to continue being bullish, as we have been really since April, bouncing off of that support. So April and May has been good, nice little wave rotation, expecting something like this to occur on the SPY. Slowly but surely continue higher. So I'll be keeping an eye out for the bulls to come in. And if SPY and the broader markets take out the lows of today sometime this week, that will be a little bit more bearish, and it will likely provide some solid reasoning that we're going to continue to chop and go. And chopping is just going really sideways. So step number 2, or write up number 2, note number 2, Newsom nugget number 2, whatever you're going to call it. In a sideways market, when the broader ETFs, indices are sideways, your main goal is to find a stock or pattern or shape that is doing or looks different. So in a sideways market, when the broader ETFs and indices are doing sideways and they're chopping around, your main goal is to find a stock or pattern or shape that is doing something or looks different than the broader markets. So we're going to be looking at a few of those examples today. So if I'm doing a swing trade, right? So a swing trade generally is defined as days to weeks to months, usually. And that's what it comes down to, your time frame. We're going to talk about that in this class. But if you are swing trading and you know that you're in a sideways market, when the market's choppy, when it's sideways like it is, your main goal is to find something that looks different than the broader markets. Otherwise, you could really get whipsawed to shreds. So that's my overall second takeaway. The Dow, I don't really see anything massively important that looks right now in the Dow. Here's the Qs. Ticker symbol QQQ, and then after I look at the broader markets, I'm going to exit out of this and load a new chart session. It's going really slow. So the Qs literally made a new all-time high 2 days ago. So first and foremost thing, ladies and gentlemen, I've been telling a lot of people what analysts to listen to and what analysts not to listen to. If anyone is telling you that we're in a bearish market right now, please stop listening to them, delete all their emails. They do not know how to trade. What about this looks bearish? Does anything look bearish on this chart? No. Nothing at all looks bearish. So if anyone's telling you we're in a bearish market, they're just simply wrong. Simple as that. This is not an opinion. This is like a mathematical fact. The Qs and the broader markets are in a bullish trend. I hear the word confirmation a lot. And confirmation, people say, I need to wait for this trend to confirm. The biggest challenge I find, at least with confirmation, is once something has confirmed and given you all the signals that it should work, it is usually too late. And not only that, but if you get into a trade that has confirmed and it doesn't work, what does that do for your psyche? right? Because most people are like, confirmation, hello, it should have worked. I went through all 100 steps and the trade didn't work. What's going on? It should have worked perfectly. What we need to understand is all things work in the market, just not all the time. When it comes to confirmation, as I see it, your biggest and only goal of confirmation is to determine the trend. Once you have the trend established, and take it from one personal trader to another, once you have that trend established, there's only one thing you can do. Get into the trade and lose less money than you make. Because you will either be right or you will be wrong. If you're not in the trade, it doesn't matter. You can't do this if you're not in the trade. You can go, oh man, I wish I could have, I should have, that would have been fantastic. But if you're not in, you can look back and always analyze what you could have done in order to get in so the next opportunity arises. Great, but you're not making any money. Right? At the end of the day, stock market traders are here to generate some type of income. So you've got to be in the trade. So if you're not in the trade, it doesn't really matter what you thought. Am I right? So you got to get in. You have to be in. And in order to be in, determine the trend. If you want to be in, determine the trend. And once you know that trend, take the trend in that direction. I'll give you a hint. It's usually bullish. If you can't figure out the trend, it's sideways. So the trends are either up, down, or sideways. If you have no idea what direction the trend is, it's probably sideways. Otherwise, you should look and see it's obviously bearish or it's obviously bullish. Now, the ironic part is there's people that will say, well, Newsom, if you're always bullish, aren't you going to lose on trades? Yeah. Yep. I lost in some bullish trades through here, and I lost in some bullish trades through here. However, I did really well through here, and I did really well through here, and really well through here. And again, right, this little area didn't do that hot. For my swing trades, so remember, time frame. Day trades in the red, I did phenomenal. In the red, it was thumbs up, gravy city for day trades. In the green, phenomenal for swing trades. So yeah, ladies and gentlemen, you will lose on trades. It's going to happen. Enjoy, prepare. Okay? Most of the time, you're going to be looking for bullish trends, I would argue, on average, because most stocks and companies are designed to go higher. So let me delete this really quick. I'm just going to go back to another session of that because it was just a little bit slow. And what I'm going to do is I'm going to pull up the stocks that we're going to look at today. And in these stocks, I'll do my analysis of what we've looked at before. And I'll go through some analysis of what to look at next and just approach, what to do, what not to do, things of that nature. Or what to look for, all that good stuff. Let me sign in. Okay, password Lita Roberts is amazing. Yep, that password worked. Get some water. Any questions while I'm doing this? While I'm refreshing my charts. My buddy Mauricio, how you doing, buddy? Kevin says, whose charting software do you have? This is a charting software called TradingView.com. It's on the top left-hand side of your screen. It is browser-based. I do not get paid to endorse them. I'm not an affiliate. I don't make money off of you guys using them. I mean, I would like to, but I don't. But yeah, you can use free. You can use it. It can be a very, very useful resource. Brenda Bailey says, can you freehand mark on there? Yep, you can. You use this little paintbrush tool right here. Little paintbrush, you can kind of draw all kinds of things. All right, so first on the list, we got Hewlett-Packard Enterprise, ticker symbol HPE. Alejandro says, what brokers would you suggest for a small trader, 5,000 US dollars? Robinhood. Robinhood is what I would suggest. So here is Hewlett-Packard Enterprises, and here is the, let's see if the long-term moving averages will pull up. So the red line is the 200 simple moving average. So what we did on HPE is this is a trade that we are already in. Now, if you want to take this trade, you're more than welcome to. It's up to you. But we're already in this one from the last few days to weeks. So Hewlett Packard Enterprises were up, just very small. So really at this point, we've been in the trade pretty much about 2 weeks. You're getting a decent amount of volume coming in on Hewlett Packard Enterprises. It is my thought that it really shouldn't break below the low of this candle. So I would take my stop and put it right there. This is our first time that we've moved the stops. I'm gonna put it below the low of this June 5th, 2018 candle. Alejandro says, any options for foreigners? I'm not an American. If that's the case, then I would say try to check out interactivebrokers.com. They should be able to provide you with a platform. I don't know if the minimum requirement is the same for international traders or not. I'm really not sure. All right, so this is going to be the new stop, and I'm going to change this worksheet to mine just in case. Move it over here. Mauricio says I use Thinkorswim. Yep, Thinkorswim is a great platform. I don't know if I don't really know where you live, Alejandro. So Mauricio says I'm from Argentina. All right, so there you go, Alejandro. Mauricio's in Argentina, and he uses something called Thinkorswim, which is the same thing that I use. All right, HPE. Let me update this. Now, this is one that I did post in TradingView pretty much for everybody. So I will pull this up and kind of post it in here. Marpel says it's 1 a.m. here at our place. Can't sleep, so I got up and opened my computer. 1 a.m. Where are you in the world? So what? You're 9 hours ahead of me. All right. Yeah. So where are you? You somewhere in Europe, I'm assuming. My guess. Ah, got you. Okay. All right, so I'm just going to update this. So this was the original setup. The original setup and increasing stop. So I will just throw this one in the chat pane. So again, if anyone wants to continue to track HPE, you're more than welcome to. Troy Allen says, do you follow track a standard list of stocks? What is your primary source for swing trades? Yes, I follow and track a list of stocks. And my primary source for swing trades is I look for gapping stocks that are doing something different than the broader markets. Most of these stocks are stocks that other people request, Troy. So people like you, and I go through all the analysis, and if I find one that I like, I will set up a trade on it. So really, you guys provide me with all my setups. I'm lazy and I don't do anything. I just wait for it to, I go and analyze it, and then I set the trade up. So here's what looks like a flag pattern. I'm hoping this happens right here on Hewlett Packard Enterprises. If that does not begin to occur by the end of this week, then I will probably look to just bail on this trade. What I'm going to do is write that down so that I can tell myself that in the future. If HPE doesn't make higher highs by end of week, look to exit if possible. So we'll see what happens. That's just me telling the market, hey, this is what I want you to do. So if it doesn't, I'll continue holding the trade. And if it does not do that, then I will look to exit. FC says, could that be the back end of the retest? Yes, it could. Richard Leslie says, do you use OCO your trades before you buy or after you buy? Before I buy. Neil says, what would you consider a higher high? I would consider a higher high to be a move above this recent pivot right here. That high. That would be a higher high if it moves above there. Ali says, is your R for the same for swing trading and day trading? Yes, it used to be different until I went back and did a lot of measurements and a lot of notations, and I realized that sometimes if I had a bad swing trading month, my R was bigger for swing trades. It would counteract any profits I made for day trading, and also vice versa. So now I keep them the exact same. John says, where can I find your 13 steps to process swing trades? 13 steps for swing trading, real life trading. I was going to get to them in just a few moments, John, but I will give it to you now anyway. Okay, you guys are asking a lot of questions about HPE. Good, so the questions are coming in. I like it. And like I mentioned, I probably will go a little bit longer today than normal, which is totally fine. Here is the article, 13 Steps That Will Make You More Profitable Swing Trader. It's a very good article. If you want to check it out, it's entirely free. It doesn't cost you anything. You're welcome to check that out. Cheryl says, entry on HPE, 1585, and the new stop is 1543. I also posted the chart in the chat pane as well. All right, that's Hewlett Packard Enterprise. Let's see what Jacob says. HPE has to break the 20 EMA that's bounced off of 3 times. Do you use the 20 at all for swing trading? Absolutely. Yep, so that is what's holding it down, and that's why, Jacob, I wrote that note that if it does not make a higher high by the end of the week, I'm going to look to exit, because that means that the 20 has been holding it down effectively as a resistance. So I need it to break above there. But I do not necessarily need to have a stock be above the moving averages for me to get into the trade bullish, because otherwise you're going to be waiting way too long if it's in a bullish trend, if you just simply wait for it to get above the moving averages before you get in bullish. It can depend. Depends on the timing, depends on what moving averages. We'll talk about that. We'll continue discussing that. So Cisco is another swing trade that we're already in from a few days ago. And this is the setup. So the original setup was 43.86 by 42.86, which was $1 worth of risk. And I'm going to take that and I'm going to increase the stop below the low of this candle here, which is the June 4th candle. So increasing the stop on CSCO, new stop. And again, for all those who subscribe to Real Life Trading, you will get access to not only the trade journal, but also this really handy dandy nifty chat pane, chat room and everything like that. So increase stop on CSCO. So again, that is the swing trade. Now I'm going to come over here and I'm also going to post it in the worksheet. Updated stop. So really between the worksheet, the Slack chat panel, the webinar that I record for you, you should have all you need in order to track and visualize and determine what it is that I'm doing. Secondly, another little tip. If you want to find a way to sort through my videos faster, since I'm going to be sending you this week alone almost 15 hours of content, if you want to figure out a way to go through my stock picks quicker, I will give you a video that you can do that as well. It's actually a very cool, nifty little thing, but it only works if you have the YouTube video. So I'm gonna type in stock picks. Now again, you can do this on the website. Anyone can do this. Type in stock. I add an extra S. Stock picks. And what I did is I created a video for how you can go through my videos very, very quickly and find the companies that you care about. So if you're like, I just want to get to this, I just want to skip to the video where Jeremy talks about Apple. I don't care about anything else. That video will show you how to do that. So you can consolidate a 60-minute video into 60 seconds if you want. It's really, really cool. Again, totally free of charge. I believe I'm the only company that has given you a way to do that, but it's not revolutionary. It's just no one else cares like I do. Anyway, next on the list is GES. Now, GES is a bearish swing trade that I'm probably going to lose on, more than likely. The part that makes me a little sad is the last 2 days, the last 2 days, the market was going down. And what did GES do? GES went up. So I was like, really? Come on, man. So what I was hoping GES would do is trade down, trade lower, and roll over. Type in a 4 if you've ever seen me draw that pattern before. I should see a lot of 4s because I literally draw that pattern about 5,000 times a day. Now, here's what I really want the big takeaway to be. Even though I'm doing this pattern, and you can see it right now, I'm in the trade as we speak. This is one of those examples that might turn into a loser. Type in a 5 if that makes sense. Because even though the patterns are there, even though I can take a trade, that's fantastic. You're going to lose on trades. It's not a big deal. Just lose small. Learn. Put in time. Get an idea of what your trading plan is, what your strategy is, what you want to follow. It takes time, my friends. It takes time. So yeah, I'm probably going to lose on this trade, but this is, I think I've actually lost on the last 5 of my bearish trades, which is okay. That's all right. 5 of my last swing trades that are bearish. Because again, I primarily focus on bullish trades. The reason I did this is because it was one of the weakest looking stocks out there last week. And I was like, you know what? I'm in like 7 bullish swing trades. I might as well have a bearish trade out there just in case. And even though the market did go down the last 2 days, this particular stock did not. So whatever. But all I can say is, yeah, you're going to have losing trades. It's not a big deal. Really, in a way, this is a hedge. Because if the market does go up, we're in a few bullish swing trades. So I'm hoping those work out. So let's say over the other trades that I'm in, I make 2 R's and I lose 1 R on this trade. Is that good? That's good, baby. I like those R's. I'm a pirate in the stock market, baby. Give me those R's. So that's GES, ticker symbol GES. That's what I have. That's a bearish swing trade that we're in. We probably get stopped out on that, maybe even tomorrow. There's nothing I can do about it. I can't move my stop. I've only been in the trade a few amount of days. We also got triggered in on QD. So this is a stock. This is the story of a stock. Let me add QD really quick. So QD, this is a setup that we've been keeping an eye on for really about the last 2 weeks. This one is just now triggering. 990 by 850. I'll throw it in the chat pane. If you want to take it, you're more than welcome to. Type in a 4 if you have no idea what a stop limit is. And since I expect some 4s, I'm going to come over here also to reallifetrading.com. And I'm going to type in stop limits. So I only have 1. Okay, nice. So most of you are familiar with that order. Very good. Well, for those traders who are not, remember, folks, this is a judgment-free zone. It's absolutely okay if you're a total beginner and you have no idea how this stuff works. I like that. So what I'm going to do is give you a infographic that will help you understand stop limit orders. Because one of the things that to this day still baffles me is other companies don't teach broker orders. Why is that? So type in a 3 if you've bought a strategy from another company, go through all the strategies, you get the strategy, but they never talk about how to actually put it to the broker. Like, what? Why is that a thing? You should know how to put it into the broker. I mean, it's very simple. So anyway, this is a really cool infographic. I hope it will help, and we have a few more like that if you need to. So anyway, you can set this one up as well. This one just triggered in today. Ram says the overall trend is down. Why going long on this trade? Very good question, Ram. Very good question. You are correct. It is a bearish trend. So Ram's like Newsom, you just said a moment ago that go with the trend, right? You're absolutely correct. I did. Most of the time, I will go with the trend. But let's ask this question. Number 1, is this doing something different than the broader markets? What do you guys think? Is this doing something different than the broader markets? The answer is yes. Broader markets have been going higher since November. QD has been going lower. So that's check number 1. It's doing something a little bit different. Now, I took this trade based on a theory that I have. This theory is not, I haven't statistically or mathematically proven this yet. Working on it. What you'll also notice is this is an IPO. In fact, it's a recent IPO. And it's on the New York Stock Exchange. So let me just ask you all a broad question. Do you think the New York Stock Exchange will let this stock go to 0? No. At least not less than a year. At least not in under a year it won't. So I'm taking that theory of mine and saying, all right, I think there's a very, very, very small chance this stock IPOs in October and then goes to zero in less than a year. So with that, I'm thinking to myself, all right, well, at some point they're going to prop it up. John says, how are they going to prevent it from going to zero? Articles, analysts, upgrades, all kinds of things. Some new report that comes out about how impressive they are or how a certain company likes them. Alejandro says legal manipulation. I mean, you know. So that's two steps. Now the third one is something that I don't rely on all that often, but every now and then I pull it up. Is something I love using the RSI every now and then. I think I looked at this on the weekly. So here's also what I noticed is two other things. On the weekly chart, the RSI indicator is giving bullish divergence. So the RSI makes a higher low, but the stock makes a lower low. So it's a little bit of divergence. It doesn't mean it's going to go up, but it does mean that the momentum is slowing down and it can at least chop away sideways. Type in a 2 if anybody wants to know the last time I noticed something like this on a stock. I'll show you what stock it was, and a lot of real life traders made money on it. It was Blue Apron, APRN. Stock IPOs gets absolutely wrecked. And then you'll notice the RSI makes higher lows as the stock makes lower lows. So keep in mind, even though I'm seeing the same pattern, okay, a lot of us are up over 100% on Blue Apron, because it was very cheap down here. So with that being the case, I'm not saying that QD will work. What I am saying is the pattern worked last time. So what am I going to do? I'm going to do it again. What's the worst case scenario? I lose a little bit of money on the trade. Jacob says, so what's the overall theory? The overall theory is the stock exchanges are not going to let a stock that IPOs go to zero in under 4 years. It's either going to get bought out or it's going to merge with another company, but it's not going to go to zero. So the theory is wait for the stock to go nice and low after IPOs and look to play it bullish. That's pretty much it. So anyway, for those wondering about what I think Blue Apron's going to do, I do think Blue Apron's going to trade sideways for a little bit, something like this, and then slowly continue higher. Not a very expensive stock either. Alex says, any video on RSI? What do you think, Alex? Does anybody want to make a bet? Does anybody want? Alex says, yeah. Of course, man. Tony says, I'm buying calls that he does. I do. Relative strength, STRENGGTH. Let me see if that works. If not, I'll go to YouTube. Let me type in RSI, see if RSI works. I might not have it on the actual website. Okay, I'm just going to go to YouTube and get it. RSI indicator, real life trading. So remember, folks, you can do that at any point in time. Go to Google, type in something that you want to learn, followed by the term real life trading, and I probably have a video on it. Click on videos. Bollinger Band, where's my, I need it. I think I actually typed in relative strength index. Relative, see if that pulls up. I'm not, there it is. How to use the RSI indicator in real life. It is on the website. Okay, I just typed it in wrong. There you go. Leah says, but in the case of a Chinese company, maybe the Chinese government has the power to take it. I think she's talking about the recent IPOs for some Chinese companies. Yep, I would agree. Been making some really solid gainages on that one. John, looking at APRN right now. The other two on list for Wednesday. All right, So that's just John, my buddy John Daxon in Houston. John P, I replied to that in the chat pane earlier, my good friends. He says, I've been in Square since the earnings report, bullish. Any comments on how far it can go? Hold it for 2 to 3 years. Until you go out to your front lawn and throw up, John, keep holding Square. That was the exact reply, and I also made in the comments. Okay, QD. We looked at it, we're in. Maybe it works, maybe it doesn't. And the other trade that has not triggered yet is PVTL. Brian says, missed the first part. Did you discuss how to find swing trades? Not yet. PVTL, this is still open. 25.92 limit buy by 22.92, $3 of risk. I don't know if this will trigger, but ladies and gentlemen, keep your eyes on PVTL. Does this look different than the broader markets? Yes or no? Yes, it does. Does it have a bullish gap, Brian? Yes, it does. Is the trend unquestionable? Yes, it is. You have those 3 things, you're feeling good. So this will help answer Brian's question, because the way I found this trade is very simple. Gap action. I mean, that gap right there is so nice, right?
I'm a classic cat. Look at me, no candles on the screen. I'm a classic cat.
You know what's up. Yeah, that's how that happens. Jay says, why the buy limit rather than a buy stop? So Jay, I'm trying to buy on a pullback. That's pretty much the answer. Now, if I'm doing a buy stop order and I want to take a breakout, I get that. I would look at that point on an hourly chart. Joe says, I know, but you're trying to catch the falling knife. Why take the risk? Ooh, Jay, I like that. I like that philosophy. All right, Jay, answer me this question. What is the trend on this particular stock? It's bullish. That is correct. So is the knife falling? Or am I going with the trend? How do people get in on a bounce? Jay says it could pass my stop. It could pass my stop, but it could also trigger me into the trade and make tons of money. How do I know which one to be afraid of, Jay? How do we know? Jay says back to the falling knife, back to the rising trends. You're thinking about it from a negative perspective. You're afraid of the risk is all I'm trying to say. If the trend is bullish, buy the pullback. It's just simply your mentality. All you see when you look at this chart is fear and panic. You have probabilities and you have risk rewards. If the trend is bullish, which you said, right? And the trade comes down here, it may bounce and it may not. But this way, I can automatically set up the trade, Jay. I don't have to be in front of the computer. If I'm doing a limit buy, I can set the trade up, set my stop up, set my target up, OCO the whole thing, and walk away and make it an entire automated trade. Don't have to be in front of the computer at all. To me, that sounds wonderful. Right? And so that's really the goal is so you can set everything up. Jim says, please describe your OCO. And then Jay says, you could have done that 2 days ago. I tried. I had the order set up, Jay. It just missed it by $1. So the low of this was 26.43. I would have already been in the trade, but I just barely missed it. So I'm going to leave it open just in case. OCO stands for order cancels other. Mauricio says, can you please explain why you set the order to 25.92? Originally, it was at the 20 EMA on the hourly chart. 20 EMA on the hourly. So I would look into figuring out if you can do this in your broker. John says, how would you set up OCO using options? Depends on the broker, John. What broker do you use? It's very easy with Thinkorswim. Yeah, oh yeah, it's super simple. So just email me, John. I'll send you some videos. For anyone, if you guys want to join real life trading, the amount of videos I have is uncanny. I can give you all of your answers to all of your questions regarding brokers, at least. So anyway, Jay, you by no means have to take this trade, but I like it. And I'm just going to say, if it pulls back and bounces, cool. And if it doesn't, then I'll miss it and I'll try to get in later. Ram says, have you used Tree Smart Edge? Yep, it's pretty good. Kevin says, can you trade in the overnight market with stops? You can. Yeah, the answer is yeah, you can. So let's talk about time frames really quick, because this is really a great stock to talk about this on. I cover these in tons and tons of videos, but this is going to be a great session to discuss it as well. In my view of the world, there are only 3 main time frames that you're going to use. Long term, medium term, short term. Now, how you define those will be different. So I want you guys, each one of you, to type in, what is long term to you? To you, in your example. Jacob says 1 year, Ram says 1 month, Anthony says 12 months, John says years. See, you already got different answers. Marpel says 10 plus years. So you see what I'm saying? Each person is going to have their own definition of long term. For me, it's 1 year plus. Now, here is one of the most important things to consider in trading, ladies and gentlemen, is you must know your time frame with every trade before getting into it. You must know your time frame with every trade before getting in. That should be one of your rules on your trading plans, my friend. You get into a trade, you're going to say, this is how long I plan on being in this particular trade. Ram says, I think this depends on the capital that you have. It can depend on that, sure, but capital is everywhere, so just go get some more. If you need more, go get more. Money's everywhere. But it really does come down to, the biggest time frame is going to come down to, I would argue, Ram, you are correct, age and money. But age is going to be the biggest way to help you kind of determine your time frame. Because if you were 70, holding a stock for 3 years, depends, right? If you're 20, you should always have something that you own. It's a big difference between 20 and 70 regarding how long. If you're 70, you still got easy 30 years left ahead of you to trade. Plenty of time. Plenty. However, there's still that difference there, right? If you're 40, you got 70 years ahead of you. I mean, plenty of time. Plenty of time. So I think that everyone should have these 3 time frames. It is my opinion that long-term should be the absolute easiest way to make money. Ladies and gentlemen, if you can't make money long-term trading, you're doing something drastically wrong. I mean, it is real easy. Long-term trading. Here's my strategy for long-term trading. You're like, all right, dude, so easy. Tell me your strategy. Here it is. Buy into a company that you love, especially if they make money, pay dividends, the chart looks nice, and you love their product. Guys, I mean, next step is hold until you throw up. Then hold 2 more years. Then hold until you forget you own the stock. then hold longer. All right. That would be, in my opinion, if you are 50 or younger, you should have, and again, this is a non-licensed opinion, but whatever. If you're 50 or younger, that's long-term for me, should be super example. Ram says, give one example. Netflix, Apple, Square, Visa, MasterCard, Alibaba, Amazon, Google, Facebook, UPS, FedEx, Johnson & Johnson, Procter & Gamble, Walmart, Target, British Petroleum. Ram says all are at all-time highs. Now they are. Right now, they weren't a year ago, or 2 years ago, or 3 years ago, but they're always at all-time highs. If you think about it, as the market goes higher, Apple was at all-time highs 2 years ago. Ram, 5 years ago, it was at the highest it's ever been. 10 years ago, it was the highest it's ever been. When does all-time high become too high? Jacob says, so wait for a dip. There you go. There you go. One of the biggest takeaways was in a book I read by Paul Tudor Jones, and he had this chart. Now, I don't mean to disparage anybody. This is Paul Tudor Jones. This is his statement. I agree with it, but I'll do my best I can to draw it. He drew a curve that looked like this and said, what do you think the stock is going to do? What do you think the stock's going to go do? Go up or go down? Go ahead and write in your chart. If you see, right to the chat pane, you see a stock like this, what do you think it's going to do? Go up or go down? His answer is if you said down, don't trade the stock market. Because there is no empirical evidence that it's going to go down. That was his words. If you look at a stock chart and it's doing that, why in the world would you expect it to do this? I'm not saying it can't, but I'm saying why would you expect it to do that? There's no evidence that it will do that. Just like this, will the world end tomorrow, ladies and gentlemen? What do you guys think? Is the world going to end tomorrow? Nope. No, it will not. I will bet however much money you want, the world will not end tomorrow. Simple as that. There's a lot of people say the world's going to end tomorrow. There's a lot of people that keep saying the world's going to end, but for billions of years, it has not ended yet. So as we're looking at this trend, this is the exact same thing. This is the trend of Earth. Trend of Earth so far, we're 100%, world has not ended. So why expect it to end? You get what I'm saying? So that's kind of the same instance. If we look at a company like Apple or Netflix or whatever the case is. All right. So when I'm talking about a long-term, when I talk about time frame, I truly do believe everyone should own a company. Be an owner rather than just a buyer, regardless of how old you are. So if you love a company, let's say it's Google or Amazon or Facebook or Netflix or Johnson & Johnson, Southwest Airlines, Delta Airlines, whatever the case is, Budweiser, because over the long term, most stocks go up. And here's the deal. I get that Enron's happen and Bear Stearns and Lehman Brothers. I understand that. That's why you can still protect your capital. There are still ways to protect your capital. If a stock is doing this, right, like Paul Tudor Jones mentioned, and you bought in here and right here you think for some reason it's going to go down, then buy something. Buy a put option. Sell some covered calls. Protect yourself if you want. If you think that there is a chance that it goes down. And if it doesn't, then keep holding. Because at some point you're going to get so much equity that there's no reason to sell. So what, it goes down 10%. What does that matter to you? You're up 45,000%. Who cares? You know what I'm saying? So I think everyone should own a company. Longer term, it's the easiest in the world, investing, in my opinion. Obviously, you're going to have ups and you're going to have downs, but given a long enough time frame and doing a little bit of research on some companies, you should be able to make some money on the long run. Now, when I say research, I mean a company that you really like. So would you guys mind typing in the chat pane, what are some companies that you really love? You love these companies. I mean, you love them. You talk about them. If you know, you own their products, Disney, Tesla, NVIDIA. Tony says real life trading. Thank you, man. But we're not publicly traded yet, but I appreciate that. Apple, British Petroleum, Disney, Netflix, Boeing. So there's the list, right? Walmart. So you go in, you love one of those companies, you wait for it when it's nice and cheap, you buy some. It doesn't have to be a lot, it doesn't have to be your entire account. It could be 10 shares, but you're gonna wanna own something. All right, so you go in and do a little bit of research, go and look at the chart a little bit, kind of figure out what is your goal. Where is the stock at, and is it a good time to buy or not? Medium term is what we're going to be discussing in the afternoon rooms. That's what swing trading is. And that is usually 2 days to less than a year. Less than a year. Now again, here's the thing for me. These two trades, medium term and short term, come down to one thing. Well, not one thing. Two things. One thing, cash flow. So for short term, for me, I rarely hold more than 30 days for a medium term or short term trade. Because remember, here's the rule right here. You must know your time frame with every trade before getting into it. So I rarely hold over 30 days. Because I don't know about you guys, but my bills come every 30 days. You know what I'm saying? It's kind of weird, but yeah, they still come every 30 days. So I need cash flow. I need to make money. I need to be able to pay the bills. If you trade full time, if you're retired, you need to make that cash stick around. You don't want to just pull off of it every single month. So you need to create those gains. So for me, medium term and short term, you have swing trading, and then of course you have day trading. And there's all different aspects of both of those that we focus on. Karen says you can always trade around the core of a stock that you own long term. Absolutely. And I do that all the time with Apple, SPY, Square, Budweiser. Without question, you can do that. John says, do you base your decision on fundamentals and the technicals? Yep, I use both. I definitely use fundamentals, John, but of course, I want to make sure I know how the company works. I use the company often, and you'll be the first one to know if the company's product is no longer any good and you don't like it anymore. You know, the day I begin to hate Apple, I'll let all of you know, and I'll just consider getting out. Brian says, in your opinion, is swing trading better for small accounts? How small? I would say long-term investing or very, very short-term is better for small accounts. Because you can small account yourself to death with a bunch of trades if you do it too actively. Any strategy can work on a short-term account, but I would say either very short-term or very, very long-term, right? If you got a small account, it's not going to break the bank if you invest into a particular company. One of my favorite quotes by Mark Cuban is, diversification in stocks is for people who haven't done enough research. Fun quote. That doesn't mean that you're going to put all of your eggs in one basket. However, let's talk about that term, all of your eggs in one basket. That means if you break the basket, you have no more eggs. You see what I'm saying? That's what all your eggs in one basket means. If you have $12,000 account over here, and then you have a $12,000 account over here, IRA, 401k, whatever, and you take this $12,000 and you invest it in something like BP, and BP, just as an example, right? You put $12,000 into BP. Are all your eggs in one basket? No. Number one, because you can put a risk on your 12,000 and you can, put a stop loss. Number two, you have $12,000 sitting over here. Number three, maybe you have a job, right? So you can fall back on that if all things go bust. And number four, it's British Petroleum. They've been around for a while. They make money, you might have heard. They pay dividends. You know how they make money. So for me, if I had $12,000, what I would do is, I was mentioning earlier today, I would take that and put it into a company like BP at a good price. And I would go begin investing in myself, investing in education, reading books, and learning how to grow my mindset. Same thing with $3,000. That's my advice, because my advice is put your money into something safe while you are learning and while you're grinding and while you are growing your brain, getting yourself out of your comfort zone and getting yourself around people who are going to make you better. Because here's the thing, my friends, there are also people here that do not have small accounts. There are people here who have millions of dollars. So I just want you to know that they're both ends of the spectrum. All right? So there are people here in this room right now, I know their names, I work with them on a day-to-day basis or week-to-week basis, that have millions. So just keep that in mind that, yeah, you can have a $3,000 account, but there are going to be traders that have millions. So learn from them. Ask them questions. Figure out what companies they like and why. And then do some research. Figure out what the company does, how they make money, and do you like it? Do you understand it? Right? So that's kind of my initial thought process of time frames. So I'm going to go another 30 minutes max. I know I'm going long today, but for the very first day of Mentorship Monday, the open house, I knew it was going to go long. Again, I'm recording everything for everyone, so don't stress. Hope it's helpful. I don't think anyone's mad for going long because you didn't pay anything to be here. For those who are here brand new. But even that, you want more. Anyway, I'm going to continue going on. I'm just going to be quiet. That's my thoughts on Pivotal software. I like it. Let's talk about Etsy. Type in a 1 if anyone has ever used Etsy. Has anyone ever used Etsy? Okay. So for those who are typing in a 1, did you like your experience? Was Etsy good? Okay. A lot of you are saying yes. Do you know how they make money? Alejandro says commissions. Yeah, that's pretty much it. Commissions and fees. If you don't know how to make money, do a little bit of research, but yeah, they take a cut of pretty much all things sold. I like Etsy because it pours into the local economy. It is not an Amazon, even though I do love Amazon. It's not an Amazon because I can take an Etsy, and this is one of my stocks that I was most bullish on over the last 2 years because I thought Amazon was going to buy Etsy. But either way, every time Christmas comes around, what's one of the stores that I go to buy stuff on? Etsy. And there's tons of products on there that they like, and I'm pouring money into people that I don't know, but they're local people. They are men and women, husbands and wives, brothers and sisters who do something, who create some type of craft, and they sell that craft for value, and they make money off of that. I love that business model. They have very unique products. You're going to go on Amazon and buy one thing. You're going to go on Etsy and buy something entirely different. You can't oftentimes find on Amazon what you can on Etsy. Etsy is a handcrafted store. It's created, and again, it pours money into people's economy. Think about it that way. Local people who sell their products. And I know how they make money. I like them. I like their company. They're not super expensive. And just a year ago today, if you bought Etsy a year ago today for $14, you've gained around 300% return. That's pretty solid if you think about it. Now, again, people are like, oh, well, Jeremy, you can find examples like that all the time. Yeah, I can, because there's opportunities everywhere. You just have to do a little bit of research and start asking yourself, what are some companies that I like? What are some companies I understand? Write them all down and then go do some analysis. Spend 3 or 4 weeks doing analysis and come up with a list of 5 companies and then go buy some. And then let that money work for you. Let it make money while you sleep. Because I don't know about you all, but what would have been a signal? Is there any signal that you can see here on Etsy, just randomly, that could have been a good interpretation that Etsy might go higher? Any signal at all? I mean, I know it might be hard to see, but that right there, ladies and gentlemen, I'm all about that gap.
I'm all about that gap, no candle. I'm all about that gap, gap.
Gap and go with volume. Huge volume spike, and you had some volume spikes over here. Right, you had huge volume spikes over here, it traded higher, came back down into that support, acted as volume, and then gapped again. Really nice gap, good volume. Not even on earnings, says Neil, just a big deal overall. I agree. And then you got another bullish gap and go over here, another one, and then you got a retest gap. And then, I mean, that's when the bullish trend started becoming intact. I'm not saying you had to put $100 million into Etsy, but I am saying you could have put 2,000 into Etsy. And just said, okay, per Jeremy, I'm gonna hold this until I go out into the front yard and throw up. And after I throw up, I'm gonna hold it for 2 more years. Then I'm holding it after that 2 more years, I'm gonna hold it until I forget about it. That kind of mentality is important in the market. And I learned most of that mentality from one person, Mr. Warren Buffett. You probably have heard about him. He's a little wealthy and he made most of his money in the markets. Okay? I mean, even though yes, he's a businessman, he's more of a businessman than a trader. He invests in companies that he knows and he understands. He's made a lot of money doing it. I mean, he guys, he gets $30 million a day from Coke on average from dividends. Not 33, 3 million. FC says, but then you need to worry about capital gains. Here's a quick question. This is a mindset question. Would you rather pay $1 million in taxes or $10 million in taxes? Go ahead and write your answer into the chat pane. As much as I love you all, I'll let you all know if you wrote $1 million, you have a scarcity mindset. You have a scarcity mindset. You are not thinking big enough. And you need to change that immediately. Because I would rather pay $10 million in taxes all day long. The difference between someone making and having to pay $1 million in taxes and $10 million in taxes is a whole nother game. That's a whole other ballpark, ladies and gentlemen. So I'm all about paying taxes. That's great. The more money I make, the more money I'm gonna have to pay in taxes. Bingo, give it to me. I want that problem. I want to have to figure out how to pay $10 million in taxes. Give me that amount of money every year. Am I right? Type in one if I'm right. Come on, guys. That is an obvious. That is 100%. You should absolutely want to pay $10 million in taxes. That is phenomenal. $10 million. I mean, you're making so much money if you're going to have to pay $10 million in taxes. Woo! And long-term capital gains is entirely different, right? So if you hold a year or longer, it's taxed differently than short-term capital gains. And you can also make this money in a tax shelter, like a Roth IRA. At least here in the States, and also in Canada, you can have an RRSP, and you can grow your money tax-free, and it's taxed. There's no tax when you pull it out. Right? Sherry says, what? Yeah. A Roth IRA is post-tax money. Corey says tax-free savings account in Canada, TFSA. Absolutely. Same exact thing, or very similar. So you can make money tax-free, grow it as much as you want, and you got to pay no taxes when you pull it out. Deborah says in a Roth. That is correct. So all I'm getting at is you can make a lot of money in tax shelters. I mean, there's tons of ways you can make money. So don't worry about don't worry about taxes. That's all I'm trying to get at. Pay your taxes. Pay your taxes. That's great. Angela says wrong. You're taxed on a money withdrawn on an RRSP, different than a TFSA. Again, I apologize if I got the terminology wrong for my Canadians. I have had like 7 or 8 interviews with Canadians, and I had to go back and research. But if you're in Canada, you know your tax shelters. Every country has a tax shelter. You can make money tax-free, grow it and pull it out tax-free. Every country has one, I'm assuming. I know US does, I know Canada does. So yeah, you can make money tax-free. I mean, but anyway, you'd rather pay 10 million than 1 million all day, ladies and gentlemen. All day, all day, all day, all day. Do it, do it, do it. So anyway, back to Etsy. Let's talk about this gap. What kind of gap is this? It's a bullish gap and go on Etsy. And it's gapping above the highest price that it's ever been. So if you go to a weekly chart, here's a weekly, and it gapped above the high of this candle back on 2015. Look at this chart pattern. Look at that, gorgeous. Does this look like any stock that you know of presently? I'll give anyone who knows this one big hug. What stock does this look like right now? Let me rephrase. What pattern is this relative to a stock that had this pattern in the past? I don't know how to answer the question. I'll just show you. It's Facebook. The answer is it's Facebook. Let me zoom into the daily chart on Facebook and go back to 2012. And you'll see the exact same pattern. And you get to tell me, is Etsy too high? So look at Facebook on the daily. Notice how it trades down, blah, 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 accumulates, you get a bunch of gaps, you get a volume spike, starts making higher lows, and you get a really nice gap right here, and then it's just off to the races once it breaks that new previous IPO high. And look what it does. Old resistance becomes new support. Could you have bought Facebook at $44 a share and held until you threw up? Absolutely. Now, my question is, if we go over to Etsy, could we plan, if Etsy in the next weeks to months comes back to 35.81, could you buy there? And the answer is absolutely. I think Etsy is a very good bullish gap. And again, based on time frame, how long do you think Etsy would take to go to 100 from where it is now? Just go ahead and write in your answer to that question. How long do you think it would take Etsy to go to 100 from where it is right now? Now, the cool part is all these are arbitrary numbers. No one knows the answer. However, the number that you're putting in, you could write that down if you decide to buy Etsy, and write down that time frame, and then come back and check it that time frame later and see what it did. So if you wrote down 3 years, buy it, and then come back 3 years later and see what it did. Or it could take a year, or it could take half a year, 8 months. I don't know. Peter says, why wait? Why not buy it now? Let me ask you this question, Peter. If you went to a gas station one day and there was a Snickers bar for $1.09 and you went on a Monday, and then Tuesday you go in and the Snicker bar is $7.10, do you buy that Snicker bar? The answer is no. Stocks are like Snickers bars, ladies and gentlemen. Buy them cheaper. That's all I'm trying to get at. Yeah, if you're starving and literally the Snicker bar will save your life, you're going to buy it. But otherwise, you try to buy it cheaper. All stocks retest at some point. It's got to be patient. Let me sneeze really quick. All right, sneeze attack. Peter says, buy low, so high. That's correct. So anyway, Etsy. Now, what I do, Dusty says, is this session recorded? Dusty, every session I do is recorded always. Next question, Brenda says, you explain things really well. Thanks, Brenda. I appreciate that. So these 13 steps are the steps that I'm going into. I'm gonna do it on the next stock. We have 15 more minutes together. These are the steps that I go into when I'm looking for a trade. Step 1, get in front of your computer. Step 2, pull up a stock. Step 3, pull up a daily chart and put at least 4 years of data on the chart. Let's go do that right now. The next one was Bristol Myers Squibb. All right, here's BMY. Okay, Bristol Myers Squibb. Now it says put at least 4 years of data on the chart. All right, so I'm putting 4 years of data on the chart. Let me turn off the moving averages. So here's BMY. Let me go down to step 3A, determine the trend. Ladies and gentlemen, what's the trend on Bristol Myers? Sideways. You should all know that answer. Yep, you got it correct. The trend is sideways. Okay, so following this, I'm going to read it. Granted, once you determine the trend, determine your time frame. This means I'm looking at investing in the stock long term. Am I considering a long-term swing trade? Am I considering a shorter term? Is it a day trade? Right? All of that, we have to figure out their time frame. So if we go to Bristol Myers, sideways stocks take longer. Okay? That should be obvious. You can make plenty of money with sideways stocks. Just know they take a little bit longer because they're going sideways. There is no trend. When is a sideways stock going to break out? Maybe never. You don't know. So they're going to take a long time. So in this example in BMY, if I'm trying to determine my time frame, I'm likely going to have a decent amount of time frame, a decent long time frame. So number 5, determine your strategy. This is simple. What are you trading? Stops, options, or a combination of both? Step 6, pull up a monthly chart to see if you're at an all-time high, all-time low, and get an idea of what the stock is doing. Okay, so let's go to a monthly chart. So what is Bristol Myers doing on a monthly chart? Did it hit an all-time high? Wow, look at that. Look at BMY, ladies and gentlemen, because we have found a decent selling price on Bristol Myers not too long ago. It's very, very incredible. So we're not at an all-time high resistance. We did make a little bit of a hammer-ish type of candle last few months. So we're trading down at a support. Okay, so the next one, if the stock looks like this, what does this look like? You should probably rule out any longer term buying. Let me open this back in. I'm going to go back in on this so I can update that so that it actually opens in a new tab. That's what I wanted to do. I should have opened a new tab. So if the trend looks like this, consider waiting, is what I was saying. That makes sense, right? Yeah, if the stock looks like that, give it some time. Don't trade it yet. You're chasing. Hashtag Bitcoin. Hashtag don't buy at the top. Hashtag that's actually Boeing, not Bitcoin. Okay, so you want to verify, all right, so we're looking at Bristol Myers. It doesn't look like that. It looks like it's at a support. Okay, so we're 6 steps through. Kind of go down here. Step 7, if this is the first time I'm ever pulling up the chart, I'm drawing my support and resistance lines on the monthly, 2 to 3 lines at an obvious location. I've pulled up BMY before, but I'm going to go ahead and do that. I'm going to go ahead and draw my 2 to 3 lines. Again, we got 11 more minutes together. So we have a resistance right here. We have some type of support price right here. And then we have some type of level right here. And those levels obviously are drawn from this resistance, from these 2 support areas, and the third one I drew from right there. So those are the 3 lines on a monthly chart on Bristol Myers. Again, just going down this list. Step 7A, then I draw additional support resistance lines on the daily chart with 1 to 2 years. Okay, so we're going to go into the daily chart. Jesse says, are all your resistance and support horizontal lines? Yes. So this is the daily chart with 2 years of data. And now I'm going to draw some support resistance on a shorter time frame. So I'm gonna draw one here. I'm gonna make that blue. And I'm gonna draw one here. I'm also gonna make that blue. And I will draw, I was looking at that pivot, this pivot, this pivot, and this pivot. Those are the two things I looked at with my eyes. So again, just following the steps outlined in this article. Step 8, zoom in a bit more and find some gaps. Decipher the types. So now let's zoom in to Bristol-Myers and let's talk about the gap type. So this gap right here that occurred just the other day, what type of gap was that? White candle gapping up. Retest gap. All right, so we've determined the we've determined a recent type of gap. Kevin says, where can I get a copy of this rules? I posted it in the chat pane earlier, but I'll post it to you again. It is right below your question, Kevin, so let me know if you're able to click on that link and access that article. So next, step 9, pull up the 10, 20, 50 EMA on the daily chart. All right, so let's pull up the 10, 20, 50 on the daily chart. We broke above the 50, and we are above the 10 and the 20. Okay, pull up the 100, 200 symbol on the daily chart. So here's the 100 and 200 on the daily chart. They're pretty far away. Okay, far away. Step 11, pull up the 100, 200 on a weekly chart. They should not provide any issues or resistances. All right, so I'm gonna go look at the weekly and see if there's any, nope. So they're also far away on the weekly. Okay, so they're not gonna be providing any resistance there. Step 12, set up the trade based on your time frame from above. If you're a longer term swing trader, your setup is based on the daily. All right, so let's say I'm a longer term. Let's say I can be in this trade for 4 months. Could I have an entry right here at the black line, and could I have a stop loss here at the red line? And could I look to take my profit here at the green circle? What do you guys think, yes or no? The answer is yes, of course. If you did that trade, you're gonna need a little bit of a longer term time frame because you're trading on the daily chart. Guess what, folks? If you trade on the daily chart, you need a longer term time frame because you only get 20 candles a month. 20 candles. So if you use the daily a lot, you better have a little bit of a longer time frame. Now, if you have a shorter time frame, let's say you can be in front of the computer more, you're a little bit more active, you're good with technology or whatever the case is, you can trade more, then you're gonna zoom into the hourly. So this says right here, so you're gonna be zooming into the hourly. If you're a shorter term swing trader, your entry will probably be based on the hourly chart. So if we zoom in on an hourly, you could have an entry like this. Entry here, stop loss there. So this would be a limit buy because I'm looking at buying on a pullback because it is a retest gap, right? We talked about that just earlier. So I'm looking for Bristol-Myers to do something like this. Now, will this trade work? I don't know. Maybe, maybe not. Will you take this trade? I don't know, maybe, maybe not. Do you like Bristol-Myers? Do you care? Do you want to trade them? Is it exciting to you? Do you like the type of company? If all those answers are no, then don't take it, move on. But someone will like BMY. Someone likes trading this one often. Someone doesn't, so if they don't, then no big deal. And then step 13 is placing a stop where I can hopefully lose less than 1 R if the stop moves initially in my direction, which I did. Because if the stock trades down into here and then bounces, I can take my stop loss and put it right here and lose less than an R, preferably below the low of this ginormous candle right there and right there. So I place my stop where I could lose less than an R. Jesse says, after the hammer at the support, will this retrace to the same spot? It very well might. Yeah, very well might. I love the hammer, and so in being able to see that hammer, I can kind of get a little bit more of idea of where this one might bounce. So that's how I do my swing trading analysis every single day in the afternoon room. And I always talk about time frames. So in the next 5 minutes, let me give you an idea of how quickly I can do these. Let's go look at Monster, MNST. So Monster, pulling up the daily chart, you got the 100 and the 200 right in front of your face. You have a very good bullish gap and go that actually just happened the other day. Nice bullish gap and go. If we come over here to a weekly chart, we'll notice that Monster is in a bullish trend. In fact, it just pulled down and bounced off of the 200 simple moving average on the weekly. So it's in a nice little bullish trend. It looks healthy. Don't really see any issues with that. The biggest problem is you got the 100 right in front of your face. So if I was going to take Monster bullish, it would be on a very small time frame. Entry there, stop here, because that 100 will represent a potential slowdown. So if you're getting into the trade, it's going to be a little bit faster, a little bit more aggressive. It would look something like that. Exit target 1 would be the 100 for a small gain, and then hopefully it trades up to target 2 where you would exit the rest of your trade. That's how quickly I can do that analysis. Now again, for some of you, people did request Monster. For those who requested Monster, maybe you like the trade, maybe you don't. Maybe it jives with your analysis, maybe it doesn't. Maybe you're looking at going bearish if the stock closes below here and you use this as a stop. That's also possible. Camille says the retest gap will pull back and then go higher. Can you explain the gap and go? So the gap and go is just faster. Bunch of people trapped, it goes quick. It's a fast mover. When people are trapped, stocks tend to go very quickly. This is a gap and go right there. So it means be a little bit more aggressive. This was a gap and go right there. Inside candle, another gap. So really you had a few choices of getting in bullish around here on Monster. This is a little late to the party on a short-term time frame. I'm not going to take that trade personally. Won't make it official. On to the next one. Workday, WDAY. So Workday, you have a nice bullish candle. I like the fact that it closed above here. So if we go to a weekly chart, you will notice it's in a nice bullish trend. There's a lot of traders in Workday with some put sales expiring in September. You have a previous resistance here. Old resistance became new support right there. Nice support, nice resistance. So Workday did trade down to a really decent support. Here's the daily chart. And it traded down to a support. You had that nice little doji candle right here on the 11th of June, and that's where it bounced off of that support with a nice gap and go on this 12th of June. Many traders already had the put sale, so that looks good. However, on the hourly chart, this looks like an inverted head and shoulders pattern to me. So if you're looking at trading Workday, and you'll notice some very, very pretty candles, right? Nice hammer, huge bullish candle, a little bit of a double bottom. I love playing double bottoms. Here's the support and resistance. This looks like some semblance of an inverted head and shoulders pattern. Boom, boom, boom. So if I was playing Workday, bullish, I would get in on a pullback to about 129. I would set my stop here at about 125. $4 of risk on Workday. Obviously, I would look to trade that one bullish. Not going to trade that one personally, but there are a few of you already in it, and I really do like the candle today, and I do like that 100 simple moving average. Last but not least is Adobe, ADBE. Adobe, very strong bullish trend. It did have a gap down on earnings and has since bounced. So this is one of those situations where if you had your order to buy the dip off the 20, it would have worked perfectly here and here. If you did not have that order in, you wouldn't have gotten filled because it happened too quickly. So at this particular point, what I'm looking at on Adobe more than likely is the trend to continue unless Adobe closes below yesterday's low, which is Friday's low. If it closes below that, we're going to likely pull down to the 50, which we have bounced off of before. However, tomorrow we probably retrace into the high of Friday, most likely a little bit of a retrace. And then if we bounce, the trend will continue higher. But this was a nice bearish gap and go on earnings. It just did not gap down far enough to really scare anybody or really cause any panic. Had it open below 243, we probably have a little bit of a different story on Adobe. Wow, 90 minutes, ladies and gentlemen, just went by. I hope that was beneficial. I hope it was enriching, and I hope you learned something from that and you're able to take some information away from this recording. Tomorrow is Tech Giant Tuesday. Here's the stocks that I have listed for tomorrow, and I'll accept about 20 more. If you want to look at anything specific, I'm going to go a lot faster tomorrow. Feel free to throw in what stocks you want to look at. Since it's 9 minutes, I thought it started at 6 p.m. Eastern. No, it started at 5 p.m. Eastern. All right, so I'm getting a lot of requests thrown in here. Sprint, AMD, CRM, JD.com, Square, AT&T, WEED, Microsoft, US Steel, FCX, VIPS, Southwest Airlines, GWPH, and I'll give you 2 or 3 more. Nike, there they all come, RTN, and Esogito. All right, that's going to do it for me tomorrow. That's a lot of stocks to look at, but we'll be looking at all those tomorrow. We're going to go a little bit faster. So get ready. If you want to do your research now and start reviewing these stocks and see what you see, do the analysis and then see if your analysis matches up with mine. That way it'll be a win-win. Ladies and gentlemen, I truly hope this was helpful. I do at the bottom of my heart want to enrich lives and teach people how they can use the stock market to facilitate cash flow, to make more money, and to become better versions of themselves. I would love to trade with you like this every single day. If you want to trade with me, if you want to trade with my team, reach out. I'll send you some links. I'm not going to bombard you with sales pitches. You know the quality, you know the product, you know the company. We've been around for a long time, but we'll be 4 years in November. We're profitable every single year. Ladies and gentlemen, thank you so much for being a part of the open house. I will see you all tomorrow from 5 to 6 p.m. Eastern Standard for Tech Giant Tuesday. And until then, love life, live life, and trade it. I'll see most of you tomorrow morning at 9 Eastern. Bye-bye.